Hey guys, it's Max. How's everybody doing? It is about, what is it, noon on the East Coast. Let's see what's going on with the market. Looks like people are buying it right now. And last I looked, I'll look at a 5-minute chart because it's not as depressing as the longer term charts. I put it on a 5-minute chart, and here it is. Here's the 5-minute chart of the SPY just to kind of drill down, because I'm also afraid about it making a new trading range down here and getting stuck. And it's trying to do that at the 542 strike right there, and it's building out two-way volume. But we're headed back up for now. So like I say, it's less depressing on the 5-minute than it is on the longer time frames. On the 30-minute, it's, anyway, the orange box, we have two orange boxes now. The top orange box is the election, the orange box left over from the election gap. So that, and the bottom box is the tariff announcement. So we'll talk more about that stuff in a second, and strategy and what have you. Okay, news. I haven't put in the gap from this morning yet, but look at here's what I'm thinking on SPX, and I saw a big trade go across, a big option trade go across that was aiming for this strike. See that 55.60 right there, and aiming for it by tomorrow. I think 55.65. An SPX call at 55.65. And it was like more than $1 million. Let's go see if I can find that. I tried to save it. Well, there it is. There's a 1.2 million, yeah, for tomorrow. But that one's only a 55.14. That one's a little closer now. This was 15 minutes ago. It cost $89 for the fully featured. This is I paid this is $29 for the 15 minutes behind, or $19 or something. I've been watching this all morning. Everything I've seen is bullish. I've seen very little bearish things. Here's IBIT, that's the Bitcoin Trust. Here's somebody selling a put spread. It's just $52,000, but that might be a good trade for a smaller account, maybe for somebody like me. If you want it to be a way to play, I'm looking for bullish things to play, because I already have my hedges in place and they're doing great. I'm looking for something that'll do all right as my hedges start to lose money. And I wouldn't be interested in this one. Boy, that's they sold the 40 put. They're just trying to, for 30 cents, and they bought the 35 put for 11 cents. They're trying to make 20 cents real quick. That's the kind of trade that you're either super smart or you lose a lot. I generally like something more like that or something. At least where you get some credit. Right here, you get $173 credit on $1,200 margin. You at least get 15%. You still have a 7.3% buffer on break even. But anyway, it's good news. Whatever, that guy can do what he wants. It's good news that people are doing that kind of stuff. If you're a bull, and everything I've seen, I'm also filtering out for out of the money, for new positions, and for above the bid or ask. So people are buying these aggressively, like this guy right here, the 54.75 call for today, $250,000 worth. Let's go look at that one. I bet this guy does well. I bet this trade's a winner. Well, let's save this trade and we'll watch it today. I bet this trade is a winner. I have no idea. I just, for some reason, the Bears had their chance this morning. They got it down where they needed to get it. I don't think there's enough power to run it down to the next one. Like I always say, barring a tweet, I think we should bounce somewhere where it'll peter out, and then that, But I think the Bears have already had their fun for this morning. But anyway, let's see what this guy's buying. So the 54.75 for today, it's just a 47 delta. So it's not exactly like a YOLO. It's about a 37% chance of profit. So it's whatever. That's not that interesting of one to save. I was thinking it was going to be far out of the money. I have too many other things saved. GTES, have you guys ever heard of that? It's only $64,000. All right. So I had some other stuff to look at too. Let's look at the buffer report and that kind of stuff. I made some new charts for the model portfolio. So this is the model portfolio right now. This is whatever the model portfolio is up or down. It's what here's actually the allocation. Here's the model allocation. All right, YQQQ, GPTY, ULTY, and GDXY. They should all be like 20%, and these should be like 2 or 1 whatever the difference is, 1.5 or $1.60 or something. All right, but they grow a little bit out of balance and whatever. And I'm glad this one's a little bit higher now, but now that the market's lower, I should maybe rebalance this and take some out of this and put some into something else. But I'm thinking about that. Anyway, so that's the allocations, but here's what's happening today. This is the up or down. We don't have to look at that stupid spreadsheet anymore. We have to look at this stupid chart, I guess, but it's better than the spreadsheet. It's easier to look at. So YQQQ is making me 79 cents. GPTY is costing me $1.20. Alty's costing me 97. These other ones are small winners, small winner in fiat, small winner in dips because the market's bouncing. So, but I'm down 1% today. And this is according to Google, and this is 15 minutes ago. The market is down 3.4%. And I don't know if it probably still is down that far. But a 60-40 portfolio, which is what I'm trying to beat, is down 1.8. So the max buffer report is looking good. So that's fine. Now let's look at the real buffer report. Let's look at the one you guys care about. Let's look at the Altiverse and all that kind of stuff. No, not this. Gosh darn it. That's not this. Let's look at this one. Yeah. But we'll just start there. Yield max buffer report. It's GDXY and nothing else. I mean, Netflix parent is up. Netflix is up, not Infly, but the parent asset is up. Well, I mean, and of course, wasn't it down like 30% in one day last week? It's already sold out. I mean, there's no more sellers left in that, right? I mean, I wouldn't think. Anyway, you can see the story. I mean, nothing's outperforming on the downside except for Fibby and PyPy and Abney. Airbnb's been a good one lately, though. But not today. All right, so let's go over here to the index buffer report. And what do you want to bet? It's FEET, 5E, SVOL, ZVOL. We need to check the volatility also. We didn't check the volatility. I always forget to check the volatility. All right, we'll check that in a little bit. And this is ugly. That is ugly. YSPY down 4.78%. Ooh, that leverage helps you on the way up. It hurts you on the way down. I mean, there's not much you can do. And you even have steady funds like, XDT and funds that everybody loves are also getting killed. GPIX, great fund. It's getting murdered. SPY, it's getting murdered, down 3%. What are you going to do? iSpy, decent fund, getting murdered. All right. Well, so what do we have? SVOL and ZVOL leading the way. Well, they're based on volatility, and volatility is going up today. But I pointed out several times in the morning show, and I'll keep pointing it out until it's no longer true, that volatility is not making a new high, which is a bullish sign. It's a bullish divergence. It's not confirming the new lows. It's saying that the new lows are most likely a fake out, which is kind of what I'm thinking too. I mean, at least in the short term, at least for a couple of days, a week or something. All right, well, it's YQQQ, and that's it. And then we have down here, TLTW is up a little bit today. People are probably buying bonds as a flight to safety. But everything else is just getting killed. So let's check out Alti. This is going to be ugly. This is going to be ugly right here. Especially this Restoration Hardware, 40%. My gosh. That right there makes the case why I like indexes, and 90% of my trading, especially when I'm selling something, is in indexes. But my gosh. All right, well, Alti's down 5%. The average stock's down 9%. So the option strategy is doing a good job. They have collars on these. They have half the downside of the stocks. That's, it's as much as you'd expect. It's as good as you could expect. Now, GPTY having the entire market hedged, they hedge in a different way. They just hedge the NASDAQ with puts. I think they're down a little bit less. I would have hoped, but that not so. They're down 5.4%. Their average stock's down 5.7%. So their hedges haven't really kicked in. But that's kind of the way hedges work lots of times. They only work for a total meltdown, but you're still glad you had them for a total meltdown. This isn't a total meltdown. This is orderly, just making a new low. We made a lower high, and now we made a lower low this morning. I swear we're going to get back up halfway through this gap. We'll get back to the charts in a second, and let's get out of this ETF land first. But anyway, this is ugly. There's just nothing to say about here. What's up, IBM? All right. That's GPTY. Where's LFGY? You know it's going to be ugly, but I mean, there's almost no buffer between the average stock and LFGY itself. 6%, whatever. But Riot Blockchain, it's incredible. All right, well, let's go back and see now that let's go back and look at volatility a little bit. You guys having a good day? I mean, other than the market selling off, I had to go outside. Every time I'm inside, there's a new scroll across the bottom. Canada just did a retaliatory tariff or whatever. When I'm inside, all I want to do is sell the market. I mean, there's just nothing to do. So tell me this is not. There's no way I do not have a freaking trading view window open. I have like 17 of them open, of course. All right. Well, this is the one I wanted to look at SPX, because what I think is there's been some two-way action up here at a couple of strikes. One of them's 55.20, and the other one, and this was a few days ago though, is 55.70. Well, I saw a big trade for tomorrow at 55.60. It was SPX. And it's way out of the money and whatever. But I was thinking, and then I wanted to show, when I drew the orange box for the gap from this morning, I wouldn't be surprised. I mean, a half gap fill is real common, especially in a bear market, and especially on a gigantic gap down. Anyway, the half gap fill would closely align with that 55.40 strike that guy was buying. So I think other people are looking at that too. But as far as the stuff I'm seeing over here, let's refresh it and see if it's still bullish. On the 5-minute chart, the trend's still definitely up. It looks like we bottomed, and we need to hold this area. So let's just look at out of the money. Let's just look at volume above open interest, and the ones people in a rush to buy. Look at this guy. Got $60,000 worth of Q calls. That's my kind of guy. This guy right here. And that's for today. This guy's out to June. We don't care about him. But his calls is 2.2 million. Great job. He's on our team. This guy sold puts. Looks like. This guy bought a call for June. This guy sold a call. I mean, it's not like it's all bullish, but this guy, SPX, bought call. When you look at the SPX, and that's, what runs things, and the NASDAQ, it looks like those people are hopefully thinking what I'm thinking. I don't know if I can go. There's a way to go back and look at that one trade. I just don't know how to do it. I probably just need to subscribe, and we can start looking at this stuff all the time. This stuff's fascinating to me. All right, guys. Well, I filibustered enough. Yeah, I filibustered enough. What are you guys up to? Thanks for the compliment on the hat. You made 480 on the straddle. Nice. Did you ever tell me if it was long or short? It doesn't matter. The point is, it made your account long or whatever. It made your account balance go the right direction. But it doesn't matter. It could have been either. But anyway, congratulations. I think you maybe it was a long straddle since we freaking fell 4% and you're talking about making money. Okay, no, short straddle. Well, that's impressive, especially since we fell 4% and you still made money. That's very impressive. Now, when I was watching these big guys bets, I saved one yesterday and I want to talk about, speaking of that, and here it is. I saved it as a vol straddle, but this came across yesterday right around the close or maybe at the close or something. I just hit save. I forget how big it was. They don't give you the contracts when you save it. They just save it as one contract. But I don't even know if I like this trade, but it's the guy that straddled VIX. He went out to April 16th, so that's not out very far. VIX expires tomorrow. We have an April 5th expiration, but then I think that's right, or April 4th, but then it's out till the next expiration. Well, I've just always don't believe in buying VIX puts. Are you really worried that VIX is going to go down that far that you think that's going to be? I get the idea of a straddle and you're just trying to buy the volatility. I get the idea of it, but I say leave the put side off. But it's easy to say that in hindsight. In other words, even if the market would have dropped, I don't think the put side would have paid off. But that may not be what it's about. It may be about that it pay off enough to offset some of the loss on the other side. So in any event, there's another straddle guy, but now this guy was a long straddle guy. So we have retired cop here. He knows the rules. Cops are rules followers, and he knows that usually you should sell options. Like at least 2 times out of 3, it's better to sell options, maybe more. But anyway, that's great. I'm glad to hear it. PBDA. What in the hell is that? Why are you guys always bringing me these stocks? I've never PBDA. And actually, I have heard of that. It's what is that? I looked that up the other day, or see what that is. They couldn't find anything. That's FinViz. Did I type it in wrong? Let me go back here. PDBA. PDBA, what in the heck is that? Invesco Agriculture Commodity Strategy. I like the No K1. I like the ETF wrapper. With tariffs and stuff, I don't know, but if agriculture should do worse with tariff, it should. But anyway, it should be good non-correlated to the SPY. We could check the correlation here real quick. So let's see. So straight sideways pretty much over the past year. 12% dividend, 13% really. That's not bad. Money's coming in. So they aren't getting ready to shut the fund or something. There's 61 million under management and people are buying it. So that's good. Performance year to date plus 1.7. Heck yeah. Heck yeah. 1 year returns basically flat, but you're getting 13% to paid while you wait for the inflation. This is an inflation play. I get it. Yeah. Heck yeah. Heck yeah. I like it. No K1. In the old days, whenever you used to buy a fund, you used to have to pay a manager and they would trade commodities for you. For some reason, there was something about commodities because of the physical delivery aspect, or because something was different with the tax treatment. They had to issue you a K1, which is some kind of tax statement. It's an extra thing to deal with at the end of the year. It's just an extra form you had to file because you were a partner, I think, is what it was. So I think K1's a partnership agreement. If you and I bought a bar together, our accountant would make K1s for each of us. I believe that's the way it works. So no K1 just means the ETF wrapper, and they figured out a way to get around that where I guess probably the ETF gets the K1 and it passes through, something like that. I would imagine. But anyway, it's not like it's a huge feature, because I think virtually everything nowadays, you see it say no K1 all the time. But anyway, it's another sign of the democratization of finance. And, in the old days, to invest in agriculture-based funds, you had to use a separately managed account, and it involved paying somebody to do it for you, and it involved extra layers of complexity and taxation. And for some reason, commodities are taxed different, and they involve K1s. I don't understand why. I like to stick with the SPY and the Qs, and that's all you have to do. That's always what I want to see. Wasn't a big trade, but you wanted to prove yourself, retired cop. I get it. I get it. I mean, that's awesome. That's awesome. I mean, you must have gone pretty far out of the money not to get your put strike in trouble today. Was it on an index? I forget what it was on. Hey, on another, but while I'm waiting for that reply, people are buying Tesla calls also. I saw somebody buy more than $1 million worth of Tesla today. Let me try to recreate that. I think I can put just Tesla in here. And yeah, look at this. Well, and it was only 118,000. I swear I thought I saw something bigger. And this is not for this week. It's for next week. But I mean, the 275 call, that's, and down here this low, that's probably not a bad play, especially maybe Elon's maybe getting out of the government business soon. And so maybe they're anticipating as that happens and stuff, the news flow for Tesla might improve and it might turn around or something. I don't know. But I thought that was somewhat interesting. Did any of you subscribe to Unusual Wells or a service like this? I mean, Unusual Wells is probably a better service than this one, but this has all the same stuff. It has Congress flow, insider flow, historical flow, where like if you subscribe and I was having a live stream, I could say, hey, I saw this trade at right after the open this morning, and I could go back here and show it to you guys. We could, or, I saw this trade at the close yesterday. This guy bought. So, I mean, I just don't know. $89 is a lot of money. And I think that, I really don't think Unusual Wells is that expensive. I think it's like 50. So anyway, but I'm going to get whichever's the best one. I think I've decided to do that. I don't know. I really like this stuff. So look at this. Here's some other stocks that have had bullish flow today. And this is out of the money options, and it's short. It's nearly dated. Well, no, I'll switch it to nearly dated. Here's less than 30 days. Out of the money, tons of volume. The volume over open interest means it's a new position. I'll explain some other time. It's not that interesting, but it's just a way of trying to see if these are closing option positions or opening option positions. When the volumes exceeds the open interest, it looks like it's most likely opening option positions. And then above the ask or above the bid. So anyway, so on the bullish side, we have Charles Schwab, Gold Shares, GLD, Tesla. There was just that one. It was just two trades, just $230,000 worth, but Amazon. But I just thought it's good to see Tesla and Amazon at least finally getting some people buying it down here. Truist Financial, Netflix, that's good to see. Shopify. I'm just looking for stuff that's maybe bullish. What's that one? I hate that one. Restoration Hardware. Anyway, so something else. Well, I saw a gigantic bearish trade. I can't find it in one of the big banks that has earnings coming up. It wasn't JP Morgan. It was anyway, but it was a gigantic, but it went out till next June, but it was like a $50 million put position or put spread. Anyway, I'll try to find it and put that up later. Mark, I appreciate you being here. But yeah, the no K1 or whatever is something better. The ETF is just more transparency and less paperwork to have to deal with. All right, well, let's see if the market's bouncing. I mean, yes, it's bouncing, but I'm still afraid that it may pull back from here and just fall back into this little daily range, a couple of points, and just kind of die here. I could see that happening today also, just kind of building out some volume here. But it would be really great for the bulls if they could at least get part of the way into this gap. Halfway would be great. On the SPY, that's like 553 would be, and I know that's a long way. That's a huge ask. But by tomorrow, that would be, and that would catch everyone by surprise. Lots of times it's the trade that catches everyone by surprise. A lot of people that are late to the party got short just this morning, and if it does start running, people will cover like that, But I'll show you what I'm looking at on the 5-minute SPY chart, and then we'll look at volatility. I promised that earlier. I mean, you can see we ran up almost to the gap. But what I was seeing on the SPY is there was a level here at 555, and I bet it corresponds with where that well was looking at on the SPX. I guarantee this level right here does. I'm thinking it does. And they're just playing for a rally to that level tomorrow. You see that all the time, even if it's a bearish market. We made a new low. Lots of times we'll rally back to the last mean, and that'll be a good, and that'll be a good place to sell it. Now, lots of times we also, in a big gap, sometimes you just get a half gap backfill, but a half gap backfill would almost be, to this 555 level. So that would be a big case for the bulls. And it's running the other way right now. This is just a 5-minute chart. This is extremely short term. That's a large ask to have something to run 10 points. That's 2%. But we see it in 2 days. We see it happen all the time. We'll see. We shall see. Oh yeah, VIX. I was going to check VIX. Yeah, Norman, he is, and yeah, and I love Jim Rogers. I read his book in the '90s. I even think I may have an autograph by him. I think I do. I think my ex, but my wife at the time sent it off and had an autograph by him because she knew I liked him so much. She used to always watch him on CNBC, but Investment Biker or something. I need to look and try to find that book. But yeah, no, gold. I mean, gold and commodities, I'm all about. But I remember in the old days, or my dad, I was probably in high school, and I was all fascinated with day trading. I wanted to, in the market and everything. And I've been hearing about commodities, but his broker sold him some type of commodity something. He said, "Here, check this out for me. I bought some commodity something or another." Well, it was a mutual fund. And it was terrible. It was, I was looking to see it, expecting huge returns, and it was a gigantic underperformer. But I didn't understand at the time. That's what it's designed to do. I was a kid. And he probably had to have a K1 and stuff, and it was probably a huge fee. And his broker, probably retired in a gigantic house by selling funds like that to people. So, I mean, it's whatever. But nowadays we don't. Hey, Jackson. Yeah, Jackson. He just chased the squirrel up the tree. Jackson, get back here. Sorry about that, guys. I just don't want him to run out in front of a car. Not like he listens to me. He will listen if I scream loud enough. Jax, get back here. He was on his leash, but he made an escape off his leash. Anyway, is there a better ETF than PBDA? I mean, there's probably a better ETF out there somewhere, but let's talk about commodity ETFs. Charles is not here today, but I believe it's Charles always told me about one called DMBF or something, and it's a great one. We'll look it up here in a second. And then, of course, there's CTA, our friend Tom. I don't know if Tom's here today. I don't know if it's warm enough to fish in New Jersey in April. Probably so. He's probably maybe getting ready to go fishing, or who knows what he's doing. But anyway, he has one called CTA. So yes, there are probably better ones out there. Let's take a look at that. Let me show you how I would look at that. All right. So, I mean, one thing we could look at, we could see what it's held by, and it's only held by one fund. Looks like a good fund, though. Look at this Atlas America fund and look at the chart for that thing. I don't know what, but anyway, USAF. Heck yeah, go America. I like it. I mean, we need to figure out what that one is. It's also held by this other fund, Three Edge Dynamic Hard Assets ETF, whatever that is. But it sometimes it shows peers, and it doesn't show any peers here. But you can also look at peers when you go to finance charts. Sometimes, or lots of services. I think maybe even Seeking Alpha shows peers. But I usually just look on FinBiz. But okay, this other one is called like, it's a weird, it's like DMBF or DBMF. Yeah. Managed future strategy. And that's always the code. That's always some type of managed, and they have the word futures or commodity and managed in them. And it usually has some type of trend following, and it usually is designed to give you some type of inflation protection. Now, no guarantees on whether you get the protection you're paying for, but that's the idea. And I'm pretty sure Charles and other people have told me about this one. Now, it was like a year ago. I just have a weird memory for things. Jackson, get over here, please. Jackson. But we'll look at this one, and then we'll look at CTA. Now, this one's paid 6%, so I'll say right off the bat, I like the other one better because it paid 13%, right? I mean, other things being equal, and also the other one didn't have the down and to the right look. So top 10 holdings are. Jackson, please get over here. Okay, treasury bills and the derivatives offset some type of hedge. And lots of times they're long short, and that's what this looks like. These guys are short the yen and they're long gold. And what they'll do in some of these funds, they'll look at the basket commodities, they'll buy the commodities that are going down, or sell the commodities that are going down, buy the ones that are going up, have a long short basket. But that should give you inflation protection, is the way it's designed to work. But anyways, so this is another option. I mean, 6%, Charles likes it. He's smart. I really haven't looked into it too much. Here's another option. CTA. This one also says managed future strategy. Come on, market. It's trying to bounce. All right, now, so Tom's good at investing, and he has a pretty good track record. He also hedged off his SPY a few months ago, which was a good choice. Anyway, this, what's not to like about this one? It only pays a 4% dividend. Maybe not a yield stock, but it has a yield. It yields more than the SPY, and it gives you some diversification to the SPY. So let's see what this is held by. This is held by this fund called QAI and this fund called FIG. It doesn't show any peers on this one. I guess we could just click futures, multi-asset. Anyway, but there's a bunch of these when you get into these. There's a bunch of these managed futures or commodity trending CTA, SMA type strategies. Yeah, Mark, I appreciate you for being here. All right, I appreciate everyone for being here. I'm going to get out of here and take Jax for a walk. It's a pretty day. I will talk to you later. I appreciate each and every one of you, even you, Grateful Trader. You too. Have a good day.